With the recent ETF news from Hong Kong and Australia, Bitcoin has seen a short-term rally to 64,000. In today's video, we are going to be doing a detailed and comprehensive analysis on both the short-term and the macro charts. Let's go ahead and dive in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope everyone's having a fantastic day today. In today's video, we're going to be taking a look at the short-term and the macro price action, going into extensive detail in regards to what has happened in the last 24 hours, how the price action is developing, the upcoming interest rate data, the Hong Kong and Australia ETFs, and so much more. By the end of today's video, you will have a detailed and well-rounded understanding of not only the short-term time frame price action, but the macro price action as well. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency, with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, we do have a sale on at the moment for our VIP channel. If you're interested in finding out more information, go ahead and just click these links. Again, the VIP channel is a trading channel, but also an educational channel. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. You'll also get access to our group chats, our general chat, trading chart, education chat, help, news, daily video, and everything else we have to offer. If you're interested in getting access to that, again, contact us via that message. Let's dive into the video, guys. So as we can see, Bitcoin within the last 24 hours has seen a small little move toward the upside, retesting that key short-term resistance at 64,000. This was partly due to the fact that the Hong Kong ETF hype has been stirring up, again coming very close to trading, and we have just had word of an Australia ETF. Australia is gearing up to a Bitcoin ETF as a consequence of again US and Hong Kong approvals, looking for an expected approval date by the end of 2024. So we are starting to see now more adoption, more countries getting involved as this ETF phase, this hype pushes over. Now moving over to the market data, we can see 24-hour volume is up 43%, sitting at 127 billion over here. Relatively high considering the low volume environment we've been in for the last 10 or so days. 24-hour liquidation is sitting up 60% at 142 million. Of the 142 million, we can see 92 million have come from long positions and 49 million have come from short positions. Moving over to the broader markets, taking a look at the DXY is still in a short-term downtrend. We are expecting a continuation to retest the confluence point between the uptrend and the horizontal yearly level of support. Again, a correction towards this level would likely result in a breakdown, as we have seen a respective negative momentum shift occur on the RSI. So we are looking for a correction, an extended correction, as a matter of fact, toward this 102 to 103 zone. This, of course, would be relatively bullish for broader markets and our risk asset markets. If the DXY were to continue upwards, we would only expect a continuation upwards if our local high at 105 were able to break. If we were to see a break over this level, that is when we're expecting a continuation to 107 and maybe even higher. At the moment, expecting corrections. Broader markets, S&P 500 in the same spot as we were yesterday at 5,140. Again, provided it remains above 5,000, expecting macro continuations upwards. It is only if 5,000 is lost on the weekly candle would we expect a correction towards our 2021 high. Exactly the same goes for the Dow Jones. Sitting pretty much where it was yesterday, we are expecting macro continuations upwards. If we do fail to remain above 37,700 on the weekly, that is when we expect a correction lower. At the moment, expecting continuations higher. With that being said, guys, we have a lot to discuss. Like we said, short-term price action, total market cap, altcoin market cap, Bitcoin dominance. We're going to be taking a look at this chart over here, which goes ahead and tells us how being overbought on the weekly is not actually a bad thing in regards to momentum. And we're going to be taking a look at our macro price action according to our that 4-year cycle. Without further ado, we'll go ahead and jump into it, but a quick word from BitGet and BingX before we do. I wanted to briefly interrupt today's video to discuss the 2 exchanges we use on this channel, BitGet and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the BitGet link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, BitGet and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume, they both have extensive liquidity pools and market pairs offering up to 125x leverage, and most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and get stuck into Bitcoin. So the short-term time frame price action is very similar to as it has been over the last couple days, and there is something that has recently developed in the price action I do want to discuss, and there are some key levels that we do need to pay attention to moving forward. So first and foremost, we are still sitting very much within our higher time frame range. We're going to briefly cover the key levels you need to be paying attention to and what this range means, and then we'll get into the crux of our short-term updates and new developments over the last 24 hours. So at the moment, again, we are still sitting in our horizontal consolidation. This is a consolidation range as we have a clearly definable range high, okay, and a clearly definable range low, and the price action is moving sideways between this level of resistance and support. Perfect. The consolidation range is a massive consolidation range. This has lasted over 2 months in length, and depth-wise, we're looking at around 22%. So it is a big consolidation, and the bigger the consolidation, the bigger the reaction we generally see upon a breakout or breakdown. Again, we think about pressure building up. The more pressure builds up, the bigger the reaction, the bigger the explosion. We generally see that same reaction in markets when it comes to consolidations. Now, that does mean that regardless of the directional break we actually see, the reaction is going to be volatile. Whether that reaction is a downward reaction below the range low or a upward reaction above the range high, we are expecting a volatile reaction to occur, and whatever that to be would be quite explosive. Now, at the moment, there is no signs of weakness on this chart besides, again, decreasing momentum. But decreasing momentum is not a bad thing if you have high time frame absorption. Although exhaustion has been occurring, we are still seeing buyers step in at support, and we are still seeing demand actually come in at these key structural levels, which does indicate we do have buyers actually willing to purchase at this 60k level and hold the price above this key trigger point. That does mean, again, until support is lost, we are expecting continuations up to the range high and potentially even through the range high as we are in a bullish consolidation. Why are we in a bullish consolidation? Again, number one, our range low is being defended. We have bullish absorption present, and we have entered this consolidation from the bottom side up, indicating the likely directional continuation is going to be the same directional continuation we entered into the consolidation from. So there are slight points to the bulls on this one. There is not wiping out the probability of a correction lower, but at the moment, again, the probabilities lay in favor of a macro continuation upward still. Regardless of what happens on the short-term time frame, the probabilities are still in favor of that macro continuation. Again, for that to be invalidated, we would need to see a close on the 4-hour chart underneath our sell side liquidity. A 4-hour close or price sustained underneath our sell side liquidity would indicate the price has failed to maintain above our key structural levels of significance, and the price will likely continue lower to fill our low historical resistance range, okay, what we would call a gap in the VIPV towards our nearest support at 58k or 52,000. So that is our high time frame chart analyzed really quickly, guys. If again we want to simplify it even further, a consolidation range is a neutral pattern, therefore you should not be hedged massively in either direction. At the moment, if you are trading short term, take your scalps, okay? If we do see a breakout, that is when you expect a continuation upwards. If you see a breakdown, that is when you expect a continuation downwards. Looking at it from that perspective, we can put it 50-50, but if we apply context and we apply our analysis, our technical analysis based on the data we have, the probabilities do slightly shift in favor of that directional continuation. So let's move down to the shorter time frame. On the 4-hour chart, there is going to be two key trend lines we are watching. The key trend line is going to represent our downtrend. This downtrending resistance is, of course, the representation of the trend of which Bitcoin has been moving in since the 8th of April. So we have been in now about a 22-day downtrend. This downtrend is now also supported by the fact we can see within that 22-day period, momentum has been falling. So we have got decreasing momentum as the price action has been falling, indicating we have got a very valid downtrend. But more so, we also have clearly identifiable trigger points in which we could say with certainty, or gain a large degree of certainty, nothing's 100% certain, that if this level were to break, we would see a shift in strength in comparison to what recent strength we have seen developed in the price action. Okay, what does that mean? If the RSI is able to break out of this downtrend, it would indicate for the first time in 22 days, we have seen momentum flip positive. If we have positive momentum, remember momentum is just one component of strength, okay? We are more likely to break resistance than in the prior attempts where we did not have positive momentum, and that could result in a continuation through this resistance. So if we were to want to see a break out of this resistance, we first need to see momentum flip positive. Until we see momentum flip positive, there is still a risk we continue back into that 60k region. Let's now go down to an even smaller time frame, guys, and discuss the last 24 hours of price action. So in the last 24 hours of price action, it has been, man, it's been choppy. The last few days have been choppy. And like we said, we're moving into interest rate data. We've got the Hong Kong ETFs. We've got a lot of these news events. And generally, when we have these news events, particularly interest rate data, we see a lot of volatility and we see a lot of sporadic price action. And that is just a representation. This is just a representation of general market indecision, right? We're seeing chops up and down, up and down, up and down. We're seeing market indecision over here. But with this indecision, we have retested and formed a few key levels. Number one, we have been developing a bullish divergence over the last few days. Again, this is a downtrend in price action, okay, with a uptrend in momentum. This is going to be a bullish divergence. With that bullish divergence, we did see a rally up to retest that 64k level. And if you do remember from our yesterday's video, we said we would need to break above 64,000 to see a continuation up to retest that downtrend. So we have not actually seen that yet. Therefore, this could be a local top for the short term before we see another correction toward the downside. However, if we are able to break through this 64k level, that is when you'd be expecting a continuation to around 64.9 to 65,000. Now, if we look at it from a structural perspective, we do also have a potential descending wedge forming over here. So we go ahead and drag this channel upwards. We can see we do have, and if I just straighten this up a little bit better to make it kind of fit the pattern over here, we can see we do have a potential descending channel over here. Again, we have our high 1, we have our low 2, 1, we have our low 2, we have our low 3, we have our high 2. What does that mean? We have 2 and we have 3. That is our 5-point verification method. So we do have 5 points of confirmation, which establishes this as a valid pattern. Now, if we look at the descending channel formations, we can take measured moves from our point 1 to 2 and apply that to directional breakouts. And our directional breakout from this pattern would take us over the downtrend and would take us into the $67,000 resistance, which we know we need to break to see a continuation upwards into the 70k region. So the descending channel is at the moment valid. That doesn't mean we can't see a swing low. Again, the swing low is possible as the descending channel is a downtrend until it breaks. So any sort of price action taking us potentially even down or closer to 61,000 would be viable price action and realistic while the channel remains intact. If we break below the low of this channel, we do expect a correction into that 60k region. Enough about that, guys. That is the full short term. Let's jump over to the higher time frame charts. And before we do, let's talk about the interest rate data. So again, interest rate data, guys, is coming out in what, like literally 2 days, and it is very, very important we pay attention to this. At the moment, the consensus is 5.5. Again, the forecast 5.5, and the previous 5.5. From a statistical breakdown, it's about a 2.5% probability we do see a drop in interest rates, and the rest of it, 97.5 probability we see a pause in interest rates. Now, what the reaction or what the result of the interest rates don't really mean too much if it results in a pause. It's more what happens during this press conference that is going to play a role in developing the perceived systematic risk of future periods in the market. And perceived systematic risk is, again, the perception of future risk factors or risk in the market, and people front run future risk as the market is foreseeing or front seeing, or whatever the hell we want to use for that kind of terminology. So if we see the Federal Reserve interest rate conference or press conference, and they come out and Jerome Powell says, you know, everything's going fine, we're still moving towards a reduction in interest rates, that's very good. If they come out and say, you know what, everything's very, very bad, we're not going to reduce interest rates, that's very bad, and we're going to see the market correct. But if they come out and say, you know, everything's going okay, we would like it to be going better, we're still going to reduce interest rates, but we might reduce it at a later date. That is actually still very bullish. As long as there is no indication that they are not going to reduce interest rates, the perceived systematic risk of a future period is still going to be reduced, and on the macro scale, the price action will still continue upwards. The only impact they may have would be on the short term. We might see a month or two range period of more consolidation prior to a continuation. Keep that in mind. Let's go over and jump into our next chart. So a lot of people are saying, well, the top is in, you know, we're overbought, you know, we're oversold, sorry, whatever hell, overbought on the RSI, momentum's massive, you know, we're seeing MACD crosses, blah, 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 all this stuff. And I'd like to bring this chart to you to show you, you know, the data behind what this statement is. And the reality is that 97% or 96.54, and this is the data, 96.54% of the time we remained overbought in regards to our RSI momentum on the weekly chart. It has actually marked a continuation in an uptrend. Only 3.45% of the days remained overbought on the RSI were actually a downtrend, and 3 of those days marked the top. So that does tell us, well, using the overbought indicator to predict the top is incredibly unreliable, as statistically it has been incredibly unreliable to predict the top. It is not a top prediction indicator. Momentum is not a top prediction indicator. It is simply a representation of exhaustion. But again, if you have exhaustion and the RSI is dropping, provided you have absorption, which we can't see directly on a higher time frame of RSI, the price action will continue upwards. And generally, when we're on aggressive uptrends, we have absorption. And that's why we see, even though the RSI significantly pulls back, right? If we go ahead and we see these pullbacks in the RSI, we are seeing at the same time the price aggressively continues upwards. We saw over here, the RSI again in this overbought territory continue upwards. We saw it over here, all these periods over here, overbought. RSI continuing upwards. Again, overbought. Price action, continuing upwards. So again, guys, we have to look at the data and say, well, what are the chances? You know, that's what it comes down to. No one can really predict the top and be like, the top is 100% in right now. It all comes back to probabilities. What are the chances based on this technical reading, based on this data, that the top is in? And the probabilities are not in favor for us to say the top is 100% in right now based on this indicator alone. So a lot of people are saying, well, this indicator is saying this and therefore it must be correct. That indicator is a reflection of what buyers and sellers are doing. An indicator is a derivative of price action. The price candles are a reflection of the actions of buyers and sellers. If we see consolidation, meaning indecision in buyers and sellers over a period of time, it is natural the derivative of that price action, which was resulted in consolidation, would be momentum is reducing and we see exhaustion. However, that doesn't necessarily tell us anything about the macro expectations or trajectory of the current trend. It only tells us the leading data of what is happening now. We can't always use that as a future seeing method to predict what will happen in 4 or 5 months, or what is happening globally in terms of macroeconomic drivers that actually push price action upwards or downwards on a macro scale. So again, when we come back to all this, if you didn't really understand what I said, when we're looking at predicting tops and bottoms, you're not looking at one indicator. If you're using one indicator, again, you can always cherry pick data from anywhere. You can cherry pick data from this indicator and that indicator and this indicator to prove any bias you have at any particular time. It is about collecting a variety of data from a variety of different angles and sources and applying a contextual analysis and then looking at, well, what are the probabilities that we are at the top based on all of the data I have collected, not just on one leading indicator. Okay, moving on guys, and actually you know what, I think we'll wrap the video up there. I think that's enough today. In tomorrow's video, we'll get into the macro price action. I hope you had a fantastic time watching, and we'll catch you guys in tomorrow's video. Cheers.